By this point, we've looked at news and become economists ourselves when we look at inflation, when they're talking about the stock market and what's happening with property. But there's a common thing that most people don't understand, and it's about our money, how inflation actually affects us. And I want you to pay careful attention to this, because I honestly believe that there's less than 1% of the entire population that actually know how this works. I'm going to break it down with my trusty whiteboard in the most simple way possible, and I'm also going to show you how you can adapt your own strategy to actually make use of the next cycle. If you are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. I am currently still in London, but if you are new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now we're gonna jump into my trusty whiteboard here in a second, and I'll break down how inflation works, why it's important to invest in assets. When preparing for this video, I broke it down in a way that actually made a lot of sense to myself, and I was actually happy that I can share this with you guys as well. I promise you, you will walk away with some value here. So I've got here the whiteboard. Most will fail this test. Now what we understand is that inflation is eroding our dollar. So what does that actually mean? Well, I think this part everyone sort of gets if you've been following the channel for a while. And it effectively means that our dollar is losing its value. It's going down. What that means is if inflation at the moment in Australia is so-called 7% or 6%, whatever it is, it's a lot higher than that. But in this case, let's say it's 7%. In 2021, the basket of goods, so if you went to Woolworths or whatever, and you went and got $100 worth of groceries, the same $100 would buy you $93 worth of groceries, okay? So it's not effectively going, well, I've got $93. It's no, you've still got the $100. It's just because the price of everything has gone up, you can only purchase $93 worth of value, not $100 worth of value. And if you look back, say 30 or 40 years ago, that same $100 would get you about $1,000 worth in today's value. So just keep that in mind as we go through this, but I'm gonna break it down in a more simple way. Now, what we've got here are two graphs that I created myself. And the reason I had to do this myself and not just bring out some fancy graph that I can get online is because I've shown plenty of that already on the channel. What I wanted to show you here was how the dollar is correlated to asset prices. Now, what we can see is the dollar value has actually dropped by more than 99% in its existence. Now, what does that mean? Well, it means that the same $100 is actually buying a dollar worth today. Now, this concept might blow your mind. The fact that the $100 today is buying you a dollar's worth back then, it's true, because you could look at housing, you could look at food, you look at specific things and their dollar value was so much less than what it is today. And for the last couple of years when I've been saying, well, property in Sydney is gonna have a median value of like $6 to $10 million. You've got Coke cans that are gonna cost you like $12. People are like, that's crazy. But people back then that were paying 10 cents for a can of Coke or $1 for a Happy Meal would also tell you it's silly to think that it's gonna cost me $15 in 2022. So what we're seeing here is the correlation between the dollar and the asset prices is that this one moves down, being the dollar value, and assets go up. We know for a fact that nothing moves in a linear fashion, which means it's not just gonna continue going up all the time and there's no periods of consolidation and correction. We know that for a fact that that's not true. And what we're seeing right now is a bit of a correction, a bit of a slowdown in the property market. We're seeing it in stocks and we're definitely seeing it in crypto. But overall, what we are seeing is as there's more supply of dollars, the asset values are going up. Now we're about to find out why. Now let's look at how inflation came into the system in the most simple way. Yes, you've had things that contributed to it with the energy crisis, you got Ukraine and the Russia conflict, but before all of that, we created this mess. And I was saying it on the channel for the last couple of years that we're about to have a massive problem. The government doesn't want to address it, but so be it. If you understand how it works, you can take advantage of the system. Some people did, some people didn't. I hope you're gonna learn something from this video and actually start taking advantage of it. So in 2020, we had the virus come out and we have lockdowns, okay? So lockdowns effectively shut off the entire economy. So what that meant was we were gonna print out more dollars because now people were gonna stay at home. If they're staying at home, and if you stayed at home at any point, you weren't making money. But during the lockdowns, you were gonna get paid money. So people were getting paid, in some cases more, to stay at home than from their actual jobs. We didn't see a problem with that. There was a massive problem with that. But the government sort of went, you know what, we're just gonna survive. It's probably gonna be 3 months, 6 months, it's fine. But what happened was the people that really needed this money were using it to pay for goods and services. So in some cases, they were paying for the rent, they were going out there buying bread, they were buying necessities. But there were a lot of people that didn't need this money. Some people still had jobs, but then they had other people in their households that now were getting paid JobKeeper, job seeker payments. And that meant that their household income was actually increasing. In addition to that, the people that were paying for these goods and services were paying it to businesses that were still operating as per normal. In some cases, some restaurants were actually making more during lockdown period because they changed their model from going, we're gonna have people dine in, instead we're gonna have them online order. And that meant that they actually reduced their costs, increased their profit margins, and then a lot of people used that excess money, the extra savings that they could make, because again, we weren't traveling anywhere, right? So people were saving a lot more, they weren't spending it out, and they were just consolidating those funds. Some of those people were actually investing in assets. And that is why we've seen such a big bull run when it comes to property prices. Stock markets hit all-time highs. You had crypto taking off as well, and people started investing in those assets. So the people that have those assets were then making money from other people that were getting paid by the government to stay at home, and they invested that money, which meant asset prices went up. So hopefully that all made sense, and that is the flow of money, which is why the next part of this is a big problem. I've been saying for a few months on the channel that the problem isn't going to be just the problem. The big problem will be the solution to the initial problem, okay? So for instance, at the moment, we're hiking up rates, we're trying to slow down the economy because inflation's out of control. But there's two ways to do this. You've got supply, right? Which we can't really control because there's overseas factors that are really affecting that, or you've got demand. If you increase rates, you're then getting demand destruction. And what that means is that you're destroying demand. And the way you can do that is if you hike up interest rates, that means people have less money to go and spend, which means the economy contracts. And that's effectively what we're trying to do, because we can't really control supply. Let's control demand instead. But what we're going to see is that by doing this, we have the economy slow down a lot quicker and a lot deeper than most people think. Then what we need is the solution, where people have lost jobs, companies are going bankrupt and liquidating, people don't want to spend, consumer confidence is all on the floor, and that's when they're going to have to start cutting rates again. When they cut rates at that point, they won't be able to turn back again. And that is when we're going to see the big problem that most people aren't looking forward to. Now, over the last 12 months, I've been saying that we have a rental issue. We have supply constraints where there's not enough rental properties available. So we have a rental crisis. At that point, people didn't listen to me. Hopefully you guys are listening to me now, because Channel 9's covering it too. So they're a more reliable source than some guy on YouTube sitting in a London hotel talking to a camera by himself. But as we've had this rental crisis, I've been saying in the Patreon group that, hey, we're going to get some sort of subsidy that's going to come. We're going to get the government to come and support the everyday Australian. They're going to go,
hey, well, you know what? We're going to help everyday Australians.
And they did this already in the form of petrol. They went out there and said, hey, petrol's too expensive. Let's go out there and, reduce the cost of petrol. We'll foot the bill and it's going to be okay. But the thing is, these are such short-term band-aid approaches. The problem afterwards is even more inflation. And now we're seeing it again with wage increases. Once you have wage increases, that artificially moves its way into the economy. That goes out to the people that really need it. They use it for necessities and finds its way into the rich people's hands. And what do the rich do? They get richer by investing. And that's effectively how the money cycles work, and is why we see a disparity between the rich and the poor. What we're going to see next is probably some sort of rental subsidy. And I think it's probably going to come by the end of this year in 2022, but definitely in Q1 or Q2 of 2023. Now, why is this important? The thing is, you can't control supply. If there's no houses being built and new home buyers can't buy because interest rates are so high, you've got to reduce the demand. But on the flip side, how are you reducing demand for something that's a necessity? For going out there and saying, well, I want to reduce the amount of people that want to have a coffee, well, that's not a necessity, right? Some people would argue it is, but for most, it's not. But when you talk about your shelter, that's a necessity. And so you need some sort of subsidy to help those people. And in my humble opinion, I think the rental subsidy is actually just going to flow in, increasing their rents because their cost of borrowing has increased as well. So let's look at what that looks like. Now, a rental subsidy is what the government could give to most people that really need it, and the renters will then pass that on to landlords. Now, the landlords are going to go out there and say, well, you know what, if my rents have increased and that sort of moves sideways against the rates as well, that means I'm not going to do anything. But what happens when rates start cutting? That means all these landlords are going to have more income, they're going to have more cash flow, which allows them to go ahead and grow their asset base. That means more properties, more shares, more crypto, and they're going to go out there and continue building their wealth. The renters, they need the money to pay for their rent. They can't go out there and say, well, all of a sudden I've got all this money that I can go and invest. Inflation's kicking my ass. I saved all this money because that's what I got taught at school to do. And now I'm getting really screwed by the system. When we're looking at buying and selling, when we're looking at rental applications as well, they both work with supply and demand. And what we can see right now is every cycle has played out very similarly, where you have rates. As soon as they start going up, you have the rents follow soon after. We saw the opposite. So when the rates were getting cut, we obviously have the lockdowns, but the rental market didn't have that much pressure. More people were going out to purchase. And the thing is, investors weren't so interested because rental yields were compressing. So they didn't go out there and say, okay, whatever. So in this case, if you've only had 3 houses and you had more demand than supply, the prices went up. So if the rates actually go up, which they have, and they go up by say $30 a week, well, the thing is, the rent's going up by $50, $60, and $70 a week. That means those people that own the assets are winning again. And I've got here the big problem that we have right now. where there's less rental properties available, vacancy rates are through the floor, and you've got more people wanting to get those properties. So again, I ask you the question of who wins again. It's those guys that own the assets, and it's why the rich get richer. Now, the asset owners are the ones who win. So I want to break this down, where 99% of people are doing one thing, and you might be one of these people. So it's a time to reflect. It's not me having a dig at you. It's just going, hey, look, I'm looking at this logically. I don't know what your situation is. I'm just going logically. If someone asked me, this is how I look at things. Most people are looking at buying a place to live, a principal place of residence. Hey, Ravi, I want you to help me find a place. We don't do that at Search Property. And the truth is, we only focus on investors. I know that market inside out, where I can go out there, know what an investor wants as part of their portfolio, how to strategically grow that to then financially retire, do that in the next 10 or 15 years. That's what I specialize in. I don't specialize in knowing what you like in terms of what kitchen you like or what window needs to face what way and how big the rooms need to be for your own personal preference. So that's why we focus on the investor stuff. There's a link in the description below to the website. Send me an email as well and we can organize a chat. But with most people buying a place to live in, they also save their money. They also pay off debt. This is what we got taught. You know, you had our parents as well. They went through this period where it was like, oh, all I want to do is get rid of the debt. I'm going to focus on reducing my debt. I'm going to save all the excess money, and that's what I'm going to focus on. But most people will also work for 40 plus years. Okay. And this is the sad truth. This is why I make videos here, because I don't think people should be doing things they don't love. We only have this one opportunity that is life, right? And we don't want to spend 40, 50, 60 years doing shit we don't like. So there's other ways that if you can open up your mind, talk to the right people, get in the right conversations, and get the right expertise, you can get there. And you don't need to be making a huge amount of money to get there as well. But most people are going to work for 40 years. Then there's no early retirement, and you're saving a dying currency. We spoke about that before. Inflation's killing your dollar. I know there's a lot of older people as well that are really feeling the pinch now. And of course, we didn't know that COVID was going to happen. We didn't know the virus was going to come in. We didn't know the government was going to print so much. But the writing's on the wall. That's what the government does. That's what they've done always, time and time again. So why would this be any different? So when you're listening to people, really understand the context behind buying a property to live in. Why do you want to do it? I've got a video on this channel around investing versus buying your own property. Definitely go check that out as well. But what the 1% are doing, the rich getting richer, the asset owners, this is effectively their blueprint. Once you know the blueprint, it's still hard to execute. And that's why you need the help from other people around you. But this is a big step in the right direction to getting financial freedom. So what are the 1%? The smart money, what are they doing? They're investing in assets, right? It's fairly obvious they're looking at investing in assets. And when the market dips like it is right now, that's when people are going even harder. What they're doing is they're securing cash flow from multiple sources. So if I look at my example, I'm not satisfied with the fact that YouTube will pay me AdSense, right? If they go, oh, I'm going to pay you this much to make YouTube videos, great. But I'm not relying on that money. I'm going out there and seeking other sources of income. What most people will do is focus on their 9 to 5, and that is it. They'll go out there, do their job. By the weekend, I'm going to spend money, enjoy my life, and then come back to a job I don't like for 5 days a week. And they continue that cycle. What we need to do for not only ourselves, but our future children and generations is break that cycle. Do shit that you actually like, and it's a lot easier than you actually think if you get the right lessons in place and the right mindset. But what we want to do is by going out there and investing in the right assets, those assets will fund your lifestyle. Okay. So I'm not someone who sort of invested 30 or 40 years ago. I invested in my 20s, right? I've got a video on the channel around when I purchased my first property at 21, and I've gone out there and consistently bought. But that doesn't mean I stopped traveling. Doesn't mean that I stopped doing shit. And the reason I could do that was because I had those assets. So once you built up those assets will then pay for your lifestyle. And what you can do by then is move into a job or move into things that you like, enjoy, and have a passion for, and that is ultimate freedom. So we can see the difference between going out there, doing what most people will do, live the life that most people will, versus going out there, taking a bit of a chance on yourself, believing in yourself, and going out there, getting the help to go and invest into assets so you can understand the game and actually take advantage of it. And the final point I've got here is the rich get richer, the poor get poorer. This is unfortunately the truth that we've had for hundreds and hundreds and hundreds of years. That's not something I can change on the YouTube channel, but what I can change is advocate for you to change this for yourself and for your family. So I hope you guys have enjoyed this video. I really enjoyed sort of breaking it down for you guys. If there is any part that you don't really understand, there's a comment section down below. I'll be happy to answer any questions. But if you've taken some value from this video, smash that like button, share it with someone that needs to hear it, and I'll catch you guys in the next one. Thanks, guys.